So we have a new report by the Africa Progress Report titled Light, Power, Action, Electrifying Africa. And the report says 620 million Africans currently without access to electricity cannot wait for on-grid expansion. The report published by the Africa Progress Panel, headed by former UN Secretary General Kofi Annan and jointly launched earlier this week by the African Development Bank Chief, Dr. Akiwumi Adesina, says while mega on-grid power projects are essential to scale up national and regional energy generation, they are slow and expensive. The new report therefore calls on African governments to increase investments in off-grid and mini-grid solutions which are cheaper and quicker to install, with a view to ensure that everyone is included and no one is left behind. Very interesting stories from the Tanzania banking sector, said to be undergoing some challenges because of the political reform and a tough banking environment. The problems include an increase in non-performing loans to 10% as of December last year, from 6.4% in December the previous year. However, a report titled Tanzania Banks Navigating Through the Political Disruption by UK-based Exotic Partners in collaboration with the Kenya-based Equity Investment Bank says there is light at the end of the tunnel. Now let's bring in the author of this report, an Equity Investment Bank analyst at the Equity Investment Bank in Kenya, Mama Ismaili. It's good to have you. Good afternoon, Karibu.
Good afternoon. Thank you. Thank you for having me on the show.
It's good to have you. So, bring us up to speed with the state of the banking sector in Tanzania. Talk us through the political disruptions, the three main areas highlighted in this report, and what that means for the banking sector.
Yeah, so ideally, the new president who came into power in December 2015 has been on a reformist agenda, some would say populist. And just to summarize some of his main policy actions over the last 1 year, he's terminated senior government officials from the port authority to the electricity distributor. He's terminated or removed 10,000 phantom workers from the civil service payroll. But the biggest policy action as far as the banking sector is concerned is the implementation of a treasury single account. Now, what that has done is created some adverse economic repercussions. These are lower budget execution. And then we've also found there's been a significant slowdown in private sector credit growth. And we also find that there's been, holding back of, domestic funds, public funds. So we've seen an accumulation of domestic arrears. Now, for the banking sector, specifically two banks that we cover in this report, that is CRDB and NMB, they have felt the pinch. We've seen their earnings decline from their historical growth rates. So CRDB's earnings declined by 38.9% last year, and NMB's were basically flat. So, the reasons for this are the tight liquidity conditions created by the implementation of the Treasury single account, similar to, what you'd have in Nigeria. The second point is the asset quality, NPLs, have gone up. So you're finding that cash flows for vendors involved in public sector, private sector partnerships have their cash, trapped with the Bank of Tanzania, with the Treasury. This has exacerbated the situation. Now, despite all these challenges, we still remain positive on the Tanzanian economy because we think that the president is cleaning up these public sector institutions. So it may be painful right now, but it does bode well for the future efficiency of these public sector institutions. In the report, when we look at fundamentals, we look at three main things. One is capital trends, second one is asset quality, and the last is market positioning. As far as capital trends are concerned, the general capital adequacy levels in Tanzania remain decent. We think there's a significant buffer for most of the banks, although we are concerned that some banks are raising Tier 2 statutory capital ratio through unsustainable means, like subordinated debt or rights issues, which means they have to come back to the market and ask investors for funds quite regularly. And right now we're in a bear market in most of these East African stock markets, so it's not the most ideal time. The second thing we look at is asset quality. For some banks, like CRDB, they have their money trapped with agricultural cooperatives, in situations whereby farmers have actually sold their agricultural products outside that agricultural ecosystem. So these loans that the banks have given out are not being serviced. The fact that I mentioned earlier that this accumulation of domestic arrears, you're finding that vendors to which the bank has lent money to haven't been paid by the government, so they can't now pay the banks back. And finally, as far as market positioning is concerned, we just think that the two banks we cover are very well placed. They sort of take up a 50% market share of the central government deposits as well as the rural government deposits. So a bit of problems there, but
Mama,
should we see a gradual...
Mama, if you permit me to...
Go ahead.
If you permit me to disrupt you there very respectfully, I beg your pardon. I just need to ask, we have about 2 minutes for this conversation, and when political disruptions happen and affect the banking sector, we all know that there's no sovereign that can function without the banking system as a transmission mechanism to get growth for that economy going. So how will this work in Tanzania? What do you see as an outlook? How soon do you think the banking sector will be able to ramp up, get back strong, very healthy, and help the Tanzania new administration of President Magufuli to move things forward as, of course, the country prepares some relationship with the IMF?
Well, the view that we have from the management teams is the government has realized that there's been a significant slowdown in private sector credit growth, and it's starting to affect the economy, which is estimated to grow at around 7% for the next 5 years. So we think that there'll be a slowdown of this Treasury single account, and that will bring some liquidity back to the market. But it will take between 12 to 18 months. So we start to see the banks operating under their normalized sort of level within the next 1.5 to 2 years, which should be positive by then. And we hope that in between there'll be a significant cleanup of all the public sector institutions, or at least a relatively, we're looking at a relatively cleaner public sector market in Tanzania than we've seen previously.
Okay. Well, thank you very much today for your insight into the Tanzania banking industry, the author of that report with Exotic Partners. Of course, we thank you, Muammar Ismaili from Nairobi, Kenya. Asante. Now, a delegation from the International Monetary Fund will visit Egypt from April 28th to May the 8th. In November, Egypt agreed on a 3-year loan deal with the IMF, which involved tough economic reforms, such as narrowing its budget deficit and letting the Egyptian pound float freely in the exchange market. All that happened since the first week of November. Now, the IMF says last month that they plan to complete its first review of that program around June this year. And sticking with the largest economy in the north of the continent, Egyptian oil minister Tarek Al-Molla has replaced the heads of state oil company EGPC and the state gas company EGAS. Abed Ez Al-Regel will replace Tarek Al-Hadidi, appointed in April last year as head of EGPC, while Osama Al-Barkley will take over from Mohammed Al-Masri as head of EGAS. Once an energy exporter, Egypt has turned into a net importer because of declining oil and gas production and increasing domestic consumption. It's trying to speed up production at recent discoveries. And that's about all for today on the program. I am Bosun Amapayo. We thank you for watching, and I'll see you again.